Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited to welcome you to our first edition on the Forex Morning Mastery, your dose of financial insight and trading strategies. I do hope you had a wonderful weekend, and I hope you're prepared and pumped up and ready to go for the new week. It has been quite a very good, fairly good week for us during the previous week, where we monitored the same financial instrument, which we are also going to be looking at for this week, which includes the USOILSPOT, the GBPUSD, and of course my favorite, which is the XAUUSD, popularly known as the gold spot. And during the course of the weekend, I was able to share two videos detailing what my plans are on the XAUUSD and the GBPUSD, except for the USOILSPOT, which I wasn't able to do. And I think during the for those of you who are part of the Forex market prep, which we did yesterday, I was able to touch on the USOILSPOT, doing a detailed analysis on that asset. But it's okay if you are not part of that session. We are going to be running through the top-down technical analysis on the USOILSPOT today. So I encourage us all to stay tuned in, as we have quite some interesting setup unfolding on the chart at this moment. In fact, we had some huge traction that happened this morning, which we of course want to be on standby to capitalize on that trend, if that is going to be the case today. So I encourage us all to stay tuned in so that you do not miss out on any of the ideas we will be deliberating on today. And for those of you who are joining me for the first time, you're highly welcome on board. And I do know you may be wondering what this is all about. What is it that we really do here on the Forex Morning Mastery? The Forex Morning Mastery was an idea that was born with the utmost intent of doing follow-up details on my weekend videos. So we usually gather here 3 times in a week. That is Mondays, Wednesdays, and Friday, coming together to have a deep understanding into how the market participants are behaving, and of course using that historical data to strategically position ourselves for the next move. It's also important I mention that this is not a signal service platform, but an avenue, an educational avenue, where we get to understand how the market is behaving and using that information to strategically position ourselves for whatever move that is likely going to happen. And irrespective of what type of trader you are, day trader, scalper, swing trader, or even a positional trader, you can use the information you gather in this community to make your own independent trading decisions. So in that regard, I welcome you once again and encourage you to actively engage in the comment section. And of course, you can ask me any question whatsoever as regards to the financial market and any of the assets we are looking at. And trust me, I'm here and willing to be of help in that regard. And do not forget to give the video a thumbs up if you found this content helpful and useful in making your independent trading decisions for this week. Your likes not only support the channel to grow, but it also inspires me to continue to do more of this content on day in, day out. So thank you very much in advance as you do so. So with that being said, here we will be diving right into the business. And as always, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be influencing the sentiment in the market today and for the rest of the week. And of course, by looking at the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, and this also helps us to time our positioning more effectively after taking all of this into consideration. And based on the asset we are looking at for this week, which includes the GBPUSD, the the XAUUSD, and of course the USOILSPOT, we are going to be focusing on high impactful event from both the United States and the United Kingdom economic docket. And in fact, for this week, we have a bunch of events coming up through the course of the week, and they are very, very important event that has a high tendency of influencing the sentiment in the market, dovetailing to high volatility on the chart. However, today, Monday 12th, we do not have any high impactful event to look out for. So instead, what I did here was to look at the mid-tier economic feature, and in fact, we have the monthly budget statement report, which is coming up much more later in the day. I think in about 10 hours from now, we are going to be seeing this report from the United States. And for those of us who do not know how important this report is, you see, the monthly budget statement report, which is obviously released on a monthly basis, shows how much the US government earns and of course have spent during the course of the month. It tells us whether the government is running a budget surplus, that is more money coming in than going out, or a deficit, which simply means more going out than coming in. And of course, if the budget is in deficit, the government has spent more than it earns, which can weaken the US dollar because it may lead to higher debt and inflation concerns. And if the budget comes in surplus, that is higher than what they have spent, it can strengthen the US dollar because it shows better fiscal health. So in simple terms, this report gauges the US government's financial health and predict how it might affect the value of the US dollar. Now, if we look at the previous month here, we can see that the report came in at a deficit of $66 billion. And based on what is on the ground right now, consensus markets and economists are expecting that it will go further down and may record a minimum of a deficit of $254 billion. That's a whooping deficit we are talking about here. So we will be looking forward to see what the actual figure is going to be like. Will it be just as expected, below expectation, or even beyond expectation, which of course we now know how it's going to be influencing the sentiment in the market. Then besides this one, there are no other events coming up today from both economists. So I think this is the only major driver that everyone will be looking forward to today to decide on the next move in the market. However, it's important for us to also take into account some other high impactful event that will be coming up later in the week, such as on Tuesday we will be looking at labor-oriented data from the United Kingdom. We are looking at the claimant count change, the employment change, and of course the ILO unemployment rate. Then later tomorrow we are going to be looking at some inflationary data, that is the producer price index, and of course speech from a Federal Reserve official tomorrow. And I have a strong feeling that due to the anticipation of this event, we may likely see some extended sideways trading activity today, which could be a reflection that major key players in the market have stepped aside, waiting for this event to happen before making any aggressive bets in this market. Though we had some huge traction happen during the early hours of this week, which we are going to be looking at, and I still think that we could see some profit-taking activity ahead of this event coming up later in the week. And of course, we are going to be taking all of this into consideration while we review the chart from a technical standpoint. So this is what we are looking at so far. And with that being said, let's dive right into the business for today. So our first point of contact today for the first asset that we are going to be looking at today will be the USOILSPOT. And in fact, I already have a buy position triggered on this particular asset, and due to the fact that I did not share a video on this asset during the weekend, we are going to be taking a top-down analysis on this asset. And for those of you who are part of the Forex market prep that we did yesterday evening, of course you must have your position triggered at this point in time, as market had moved the way we had expected. So before we go into the technical details on the chart, it's important that we also take into account the fundamental factors behind the scenes that has been influencing and will continue to influence the sentiment in the market as we head into the mid-month of August. Now, topping the list is the geopolitical tension. Remember, we've talked about this week in, week out, the escalating geopolitical tensions in the Middle East, which is serving as a significant driver for crude oil prices. And of course, due to this tension, we saw an increase in US oil prices last week. Remember, we were buying the US oil spot through Tuesday, Wednesday, and Thursday and Friday last week trading session, making some significant amount of profit in that regard. Now, recent conflicts, including the Israeli airstrikes and ongoing cross-border incidents, have heightened supply concerns, contributing to the upward momentum in oil prices. And from the report I was getting this morning, I watched CNN and Bloomberg this morning. There is intelligence stating that Iran is really preparing a full-fledged war on Israel based on their preparation that they are seeing on the ground at this point in time. And this, for me, is a very critical point in the market right now. And due to concerns of oil disruption, we may likely see oil prices continue to rise. Now, how does that influence oil prices? Well, remember, Iran is one of the major supplier of oil in the global market. They do a minimum of 3.2 million barrels per day. And if this war starts, they are likely going to face some sanction from the United Nations, the United States, from the West and the likes, which could place embargo on their oil supply to the global market. And this could increase demand, and our simple economics tells us that as demand increases, price will definitely rise. So this is one event that everyone is looking forward to. When will that attack happen? We do not know, but the anticipation is causing a lot of buzz in this market. Then another factor behind the scenes that influenced the sentiment in the market, especially last week, is the positive economic data coming in from China and the US, of course. And this also has played a crucial role, as China's stronger than expected CPI data and a decline in the US jobless claim count from the United States are supporting the ascent of oil prices in that regard. Now, remember, China is the largest importer of oil in the world, and if the economy is doing very, very well, it is expected that the demand for oil is going to increase from China. And from a better than expected CPI data, it shows that the economy is robust, which is probably resulting in increased inflation as well. And this is a very positive sign for buyers of the USOILSPOT. So I think that this will continue to support the ascent of oil prices. Now, finally, we are going to be looking at the interest rate expectations by the Federal Reserve. Remember, we've talked about this week in, week out. The anticipation of a potential interest rate cut by the Federal Reserve in September is adding further support to oil prices as well. Remember, lower borrowing costs could stimulate economic activity and increase oil demand, bolstering the market outlook for crude oil. Then another simple way to look at this is when interest rate is reduced, when interest rate is expected to be reduced, it tends to bring in a negative sentiment against the currency assets we are looking at. And in this case, we are talking about the US dollar. And in that regard, a lot of people will start dropping the US dollar because of this imminent interest rate cuts, and that will devalue the US dollar, which makes the US All Spot cheaper to buy. Remember, the US All Spot is a US dollar denominated asset, and for other currency assets to buy the US All Spot, they would need to change their currency into the US dollar. So if the US dollar is devalued, then the US dollar becomes much more cheaper to buy, and because of the cheapness of the US dollar, a lot will investors and market participants will want to buy more oil to stock their reserve, taking advantage of that weaker US dollar, and this will also increase the demand for oil. Now, if we take all of these parameters into consideration, you would agree with me that the path of least resistance for the US crude oil is looking bullish at this point in time. Now, taking that into consideration, how are we as retail traders going to capitalize on this? How are we going to use that information in conjunction with the character of price action on the chart to decide whether we are going to be buying or selling? Now, to do this, we will be scaling up into the higher time frame, where we want to be taking a closer look at the holistic perspective in this market, which will be giving us a picture of what the structural pattern on the chart is looking like, and guide us into how we can strategically position ourselves for the next move. Now, my first point of contact on the US All Spot is right here on the 4 hours time frame, where if you look at the structure closely, you will see that price action since the beginning of the month of July has continued to find lower lows and lower highs. And as a result of this, you can see how price action had evolved into a descending channel. You can see here, after connecting the series of lower highs, we have the resistance line of the descending channel, and after connecting the series of lower lows, we have the support line of that descending channel. And you know, from a theoretical standpoint, looking at things from a technical standpoint, when prices within our descending channel, we'll continue to look out for selling opportunities at the resistance line and looking out for buying opportunities at the support line of that descending channel. Now, with this whole situation here, it shows that in the last 6 to 7 weeks, price has found lower lows and lower highs, and as at the end of last week's trading session, we saw how beautifully price action closed exactly at the resistance line of that support of that descending channel, to give us a signal that we are at a very important confluence in this market. And to help us navigate this dynamic, we need a key level, which we are going to be using as a yardstick guiding our trading activities for the coming week. And of course, you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying. And we are not going to be selling unless the key level is broken to the downside and we find selling pressure below that structure. Now, for this week, I have my key level situated at exactly the psychological area at the $77 per barrel. And if you look at this level here, you can see how it had played a significant role in determining the direction of price action since the second to the last trading week of the month of July. Look at what happened here. This is what I simply mean. You can see this level was serving as a demand zone at some point in time during the last week of July, before we saw price break down the structure on the last trading day of July. Then during the we saw buy pressure resume, and at the beginning of this month, price dropped below the structure, and as at the end of last week, we saw price close back again around that area. So you can see how this zone at one point in time has served as both a support and resistance during the last 6 to 7 weeks, making it a crucial point to look out for trading opportunities ahead of the new week. Then another thing about this key level is how beautifully it shares a confluence with the resistant line of that descending channel we identified earlier. So as at yesterday, for those of you who are part of the Forex market prep we did yesterday, I was telling you that we are going to be looking out for two possibilities around this area, which is a very important confluence around that resistant line of the descending channel, where we will be looking out for reversal setup here. If we continue to see selling pressure around that area, that we will join the breakdown of the neckline to probably send price back into the $74.50 level, or go as far as the support line of the ascending channel, which never happened. And if you remember vividly, I said here yesterday that as at the beginning of the new week, I am going to be playing a buy stop order above this $77 area. And if you have done that, you must have been in profit right now. You must have a buy position running in profit with a minimum of 50 pips at this point in time. And for those of us who capitalize on that opportunity, well done and kudos to you. Now, with the structure we have here on the 4 hours time frame, let's scale down into our execution time frame. That is the 1 hour time frame, where we want to see how market participants had reacted to this structure during the early hours of the week to decide whether the momentum will continue to the upside or not. Now, scaling down into the 1 hour time frame, this was what I was able to come up with this morning. And for if you look at the structure here, you will see that for the first 1, 2, 3, 4, 5, 6 hours of this week, price action was oscillating around our key level and that resistant line of that descending channel to emphasize the level of indecision going on at that point in time. And as a result of this oscillation, we saw price confined within the $77 area and the $76.65 level to emphasize the prevailing uncertainty at that particular point in time. And you know how we treat our range bound structures. Whenever we identify them on the chart, we exercise patience for buyers and sellers to make a final negotiation, giving us a signal in the form of either a breakdown of the support line of that range to give us an opportunity to sell. In fact, a breakdown of the support line of the range will bring us into seller's territory, which is right below the resistant line of that descending channel, which obviously never happened. And of course, the other thing we look out for is the breakout retest of the resistant line of that range bound structure, which also lines up with the breakout of the resistant line of the descending channel to signal buying opportunities. So as you will see here, we already have a buy position triggered. And of course, at this juncture, it is important that we move all stop losses. That is, for those of us who had capitalized on this bullish momentum, kindly move your stop losses, secure the current position. Anywhere above our entry point seems much reasonable. Maybe a minimum of 10 pips will look just fine while we secure this position and look out to see how the market is going to be playing out going forward. Now, for those of us who had missed out on this opportunity, there is no point banging our heads at this point in time. The week is still very, very early, and we still have a lot of opportunities to capitalize on an uptrend if that is going to be the case for this week. Now, since price has broken out of the $77 area, as we see here, we would want to exercise patience at this juncture to monitor price action for the next couple of hours or so to see if whether or not price will come back to retest structure. It could come back to retest the $77 area or retest the resistant line of that descending channel we identified on the 4 hours time frame to continue an uptrend continuation. So that is one factor I'm going to be advising us to do. That is for those who had missed out on that opportunity. Let's see if the market will come back and retest structure. If it does, then we look out for buying pressure to continue the uptrend move. However, it is not all the time that price action comes back to retest structure. Of course, it's not all the time. And in this case, we may see, if price does not come back and retest structure, an uptrend continuation pattern happen around here, it will come in the form of a flag pattern, a pennant, or a bullish rectangle, whichever case it may be, triggering a buying opportunity at the breakout of the resistance line of that structure. So as a result of this, I'm going to be marking another level, that is a new resistance line at the $77.60 area, where we will be looking out for more opportunity to buy here. So I encourage us all to mark out the $77.60 level. This happens to be the highest point price action has closed for this week, and if we get a breakout of that structure, we want to be adding more buy position. That is for those of us who had already bought, and for those who are just joining, a breakout retest will welcome buying opportunities from that particular area. So this is what we are going to be doing today on the USOILSPOT. Things are looking very bullish. We talked about the fundamental factors behind the scenes, and everything is pointing at price action going to the upside. So we maintain a bullish bias at this point in time, as long as price remains above the key level at the $77 area, and of course the resistance line of that descending channel we identified on the 4 hours time frame. Now, in as much as we are looking out for buying opportunities, you know how we do it in this community. Due to the uncertainty of the market, the unpredictability of the market, we always want to be on our toes in such a way that we want to be on standby to capitalize on whatever opportunity the market presents to us. So in that regard, we are also going to be taking into consideration the possibility or the potentials that sellers also have in this market. Now, what I simply mean is, what are the conditions that will make us neglect this bullish bias and beginning to feel comfortable selling the USOILSPOT? And like I did say earlier, I would like to see price drop below the resistance line of that descending channel we identified on the higher time frame to feel comfortable joining a bearish move. And as you will see here, this level shares a beautiful confluence with the support line of that range bound structure we identified earlier. So for me to consider selling the USOILSPOT, I would rather want to see price drop below structure, retest, giving us signs that sellers are getting stronger before jumping into a bearish move. So that is the only condition that will make me feel comfortable selling this market today, but I doubt that will happen. But if it does happen, let's be on standby to capitalize on that opportunity. So this is my simple view on the USOILSPOT for today. I encourage us all to mark out these levels and structures accordingly on your chart, as they will be playing a significant role in guiding our trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. So use that time as well to mark out these levels accordingly on your chart. See you in about 10-15 seconds, and do not forget to give that video a thumbs up if you have found it useful. Thank you very much as you do so. Okay, so I see a couple of comments here. Good morning to you, Forex Master. Trust you are doing very well. Glad to have you around. Okay, you say you're waiting for gold analysis. All right, no problem. I hope you're still around. We'll be doing that just in a moment. Stay tuned in. My namesake, Sharif Abdul Kadiri. Good morning to you. You're welcome on board. Glad to have you around with us. Okay, so in the absence of no questions, I want to assume that we are all on the same page. So with that said, let's move right into the next asset on our watch list. Stay tuned in. So the next asset we are looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And in fact, we have some quite interesting situation going on in the market right now. In fact, we saw a little bit of surge in favor of the pound sterling this morning, and this could be attributed to this morning's remark by the Bank of England policymaker. I'm talking about Catherine Mann, who this morning during their financial talk, there's a program that happens in the United Kingdom, financial talk. I'm not sure what the name of that program is, where she did mention concerns about the United Kingdom wage growth and its implication on inflation, and that despite the fact that the inflation rate is currently pegged at 2%, which is the target of the Bank of England, she still remains skeptical about the inflationary mechanics surrounding the United Kingdom economy. So what she's saying is that it is still possible that inflation rises again, and of course this has sent a shockwave through the market, as majority of market participants were banking on this hope to buy the GBP against the USD, with the hopes that there could be a maintaining of interest rate or even increase in interest rate due to this remark made by Catherine Mann. And we saw what happened this morning. Price really moved significantly, over 0.2% growth, but has since consolidated its that momentum as market participants digest the implication of this remark from the Bank of England policy makers. And I want to also consider that market participants might also be looking at the economic events coming up later in the week, and they do not want to jump into any risk just because of a remark from the from the Bank of England official. So remember, we talked about the labor-oriented data coming in tomorrow from the United Kingdom. We are looking at the UK unemployment rate. We are looking at the ILO. We are looking at the claimant count change too as well, all of which are labor-oriented data. And labor-oriented data usually gives us an insight into how inflation is doing in that economy that we are looking at. So this might be this might make price action go through an extended sideways trading activity, reflecting that major key players are stepping aside from the market, waiting for this data to come in before making aggressive bets on the market. So as a result of this, I'm not surprised at this recent retracement we are seeing on the chart right now. Then before I go further, on the GBPUSD, I will not be going into the higher time frame because I did a video on this asset during the weekend, and if you missed out on that video, I would encourage you to go ahead and check that video to have an overview, a technical overview of the higher time frame. I did a top-down analysis. You want to know how we identify the key level, the major trends that we are going to be using to navigate the current market dynamic, and that will also give you an idea of how we got to this point you're seeing on the 1 hour time frame. So if you missed out on that video, check right in the description box of this current video. You will find it there. Go ahead and watch that video immediately after the live session to have an insight into what is going on from a technical standpoint. So this morning, while I was trying to monitor the character of price action around our key level, remember, for those of you who watch my weekend video, we have our key level for this week at the 1.2 0.75 area. And during the first 7, 8, 9, 10 hours of the week, we saw how price action was trading around that structure, found the support at the key level, which further supports the idea that price may likely go to the upside this week. And for those who don't know how we use my key level, I use my key level usually serve as a yardstick guiding trading activities for every week. Now, what I mean by this is, as long as price remains above my key level, I want to be looking out for patterns and structures that support the idea of buying, and I will not be selling unless my key level is breached, broken to the downside, and find selling pressure on my lower time frame, confirming that sellers are going to be taking over the market. Now, besides the key level here is that range bound structure we have identified here. As you will see, we have the resistance line at the 1.27610. We have the support line of that range bound at the 1.27470 area, emphasizing the prevailing uncertainty in the market, proud to the comment made by Catherine this morning. Now, besides that, we also have the resistance line of the descending channel we identified on the 4 hours time frame, which already has been broken. As you will see, let me give a visual representation of what I'm talking about. So this morning we saw a bullish move all the way up, breaking out of the resistance line, and from a technical standpoint, from a theoretical perspective, we do expect that some point in time price is likely going to come back, retest the structure that was broken in an attempt to continue the uptrend move. And look at how beautifully the resistance line of that descending channel shares a confluence with our key level at the 1.275. So will this be a bust up where buyers are going to be jumping on the bullish wagon to the upside to this week? Well, let's wait and see how the market is going to react to the structure, and how far will this retracement phase go. So will it get into the structure? If it does, I want to be looking out for buy pressure. That is, I want to see signs that sellers are losing momentum and that they cannot break down both the support line of the range bound structure at the 1.27470 and the resistance line of that descending channel. So I want to see continued buy pressure right above the structure. Then I want to join a bullish opportunity and then add more buy positions at the breakout of the 1.27610, and of course add more if price action breaks out of the highest point this week at the 1.27875. So I still maintain a bullish bias on this particular asset. However, in as much as we're looking out for buying opportunity, I always try to balance my outlook on any asset I'm looking at. So I weigh in the potentials of the buyers, I also weigh in the potentials of the sellers, and look out for areas where I will feel comfortable buying or selling if the market goes into those territories. Now, we've talked about the potentials buyers have in this market. Now, let's look at the potentials that sellers also have. Remember, last week we witnessed the Bank of England's interest rate decision, where they cut interest rate for the first time in 4 years, which is not something that's supposed to support the pound sterling, as a lot of investors would like to drop the pound sterling to make their profit of the differential between the US and the British pound. Now, because of this, we cannot ignore potentials that sellers could also come into play. And if we look at what has been going on in the last 3, 4, 5 weeks, the market has been very bearish based on the structure we saw on the higher time frame. And in fact, the breakout we saw this morning of the resistance line could turn out to be a false breakout. And if it turns out to be a false breakout, we may likely see price drop below the key level, and that resistance line where continuous selling pressure below the structure will make us feel comfortable in the seller's territory and join the bearish move to the downside. Now, in addition to this possibility, if we look at the impulsive move that happened this morning, you will see that we have what looks like a shooting star candle which theoretically tells us that sellers are very strong in this market. So we cannot ignore the potentials that sellers could also come into play. So if we are going to be selling today, we want to see price break down our key level, break down below the resistant line of that descending channel we identified on the 4 hours time frame to join a bearish move to the downside. So this is what we are looking at today. Let's see how the market will play out. The next couple of hours should be able to give us an idea of where price is likely going. But trust me, I will be with you in the comment section of both my Trading View and Telegram platform to give you an update as at when due. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds as always. Let's see if there are any questions before we move on to the final asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page here, and I do hope you've marked out these levels accordingly on your chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And I'm yet to see your response as regards to the likes on the video. Please, I really appreciate your support. Kindly give a like to the video. It supports the algorithm by promoting it allows the algorithm to promote the video to a wider audience of traders who may find this content beneficial. And for those of you who had liked the video so far, thank you very much as you do so. We have 5 likes and we have over 9 people on board. Please, let's give it a like, and thank you very much as you do so. So with that being said, here we will be moving right into the final asset on our watch list. Is Forex Master still around? We are going to be taking on your asset in a moment. Stay tuned in. So the final asset on my watch list for this week is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And yesterday evening before I went to bed, I placed a buy position on my swing trading account, and of course I'm running with over 100 pips on this particular asset this morning. And at this point I'm beginning to look out for a retracement if I'm planning to scalp this market today. And for those of us who are in the go challenge, you're definitely going to be seeing how we are going to be doing that in a moment. However, let's quickly talk about the market dynamics today, what is really going on in this market. So I would not be going into the higher time frame. I already done a video doing a top-down analysis on this asset during the weekend. If you missed out on that video, I encourage you to watch it. The link to the video is right in the description box of the current video you are watching. So let's look at what is going on in this market. Now, for those of us who saw the video, remember our key level remain around the 2,425. This was our key level last week, if you remember vividly, before the market crash that happened on Monday. And for those of us who do not know, the market crash was triggered by various factors behind the scenes, and one of which is the surprise decision by the Bank of Japan to hike their interest rate. Remember, the Bank of Japan has been on a dovish policy outlook for over 3 to 4 years now, running a deficit of 0.1% interest rate. And out of the blues, they increased interest rates last week, and this led to a shock wave through the market as it caused a crash in the equity market, and it also incited some bullish ideas in favor of the Japanese yen, and the gold market was not left out of the picture as well, as we saw a crash during the first trading day of last week. But during the second half of the week, we saw some recovery happen on the gold market, which we of course took advantage of, and for those, kudos to everyone who were faithful to our analytical approach. So as we head into the new week, last week the 2,425 was our key level, and in fact for this week it remains our key level as price continues to show some attributes to this area which we cannot ignore at all. Now, for the fact that price action is still trending above our key level, it further opens up the idea that the path of least resistance for gold is looking very, very bullish. And if we take into consideration the fundamental factors behind the scenes, talking about the geopolitical tensions in the Middle East, we are talking about the Israel Ebola situation. Was it not yesterday we saw the Israelis intercept over 30 projectiles rockets from the Hamas? The same thing happens with the Hezbollah too as well, and the increased US military presence in the Middle East are intensifying regional risk. And these factors, we all know by now, for those of you who have been with me for a while, are supporting safe haven appeal for safe haven usually gets high during a geopolitical turmoil like this. Then we also have the Federal Reserve expectations, where market participants are anticipating a 25 basis point rate cut by the Federal Reserve in September, with some even considering the possibility of a larger 50 basis point cut later in the year. So we are looking at a minimum of 2 rate cuts before the end of the year, based on the data coming in from the United States. And based on the comment from a Fed official named Michelle Bowman, who suggested that rate cut might not be imminent, this has caused some imbalance in the market right now. And I think that the Fed officials would like to want to downplay any imminent rate cut, so that to hold the dollar afloat for a while before that finally happens. I can understand that, and I think market participants are getting the jig on that comment too as well. Then we also have some various upcoming economic data that is coming up this week that will be influencing the sentiment in the market too. This week we are talking about the US inflation data. We are looking at the CPI data coming in on Wednesday, and we're also looking at the retail sales data coming in, I think, on Tuesday or Wednesday as well. And then we also have some Fed speeches coming up later in the week too as well, which will be giving us some future insight into the Fed's future policy decision, which obviously will be influencing gold prices as well. So at this juncture, I believe, though we have a bullish traction for this week, I believe the market might go into a cautious approach and wait for the updates from this event before making any aggressive bets. So it's likely we see some retracement phase happen during the later part of today. Now let's look at the technical part of the market. Let's look at how the market is digesting these various factors behind the scenes, and how they are reacting to them, and how they are also preparing for this upcoming event coming up later in the week. So during the first 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours of the week, we saw how price action stayed afloat and above our key level at the 2,425, which first of all supports the idea that price will continue to the upside. Then we saw it confined within a range bound structure that is the $2,433.50 level and our key level at the 2,425. I personally bought it earlier. I bought it around this area above the 2,425, but I missed out on the resistance line because I was fast asleep when this happened. It happened earlier in the morning. Woke up this morning to see price has broken out of that resistance line. So at this point, I have a buy position running, and I do hope you are able to take advantage of this using our analytical approach, which we have been using week in, week out. And for those of you who joined that move, well done and kudos to you. Now, for those of us who missed out on this opportunity, there's no point banging our heads at this point. The week is still very, very early, and there are still many more chances to join any potential move that the market will present to us. Now, let's look at what is going on here. So the first thing I did this morning to acknowledge the fact that the market has been bullish. So I took a midterm view that is looking at the last three trading days. I looked at from Thursday to recent time, and if you do that appropriately, you will see that we have an ascending trend line after connecting the series of higher lows. And in fact, this trend line here is going to be playing a significant role in guiding our trading decisions going forward. Now, you know how we use our ascending trend lines. As long as price remains above the trend line, we will continue to look out for patterns and structures that support the idea of buying. Now, for those of us who had missed out on this buy opportunity, we should exercise patience, and let's see if the market is going to retrace back into structure to incite the uptrend continuation. So we have no other choice than to exercise patience here, and let's see if the market will drop, and that's about 100 pips move if that is going to be the case. And if you're a scalper, a day trader who looks out for short-term trading opportunities and feel comfortable in counter trend opportunities, you might want to capitalize on this one. But for me, I will step aside from the market, wait for this retracement phase to happen. Let's see how far it's going to go before I continue the uptrend move. However, like I usually say, it's not all the time the market goes through a retracement phase into structure. In fact, it could evolve into an uptrend continuation pattern, which after considering this impulsive leg, it could do maybe a bullish rectangle pattern, a pennant, or even a flag pattern where the breakout of the resistance line will be all we need to continue the uptrend continuation. So these are things I'm going to be looking at today. And for those of you who are going to be part of the Go Challenge, which is starting in about 20 minutes or so, we are going to be taking all of this into consideration while we trade this market right here live on the Go Challenge platform. So at this point in time, what I will just say here is, for those who had bought the XAUUSD, who had capitalized on this momentum, kindly move your stop losses. I will advise that anywhere above the resistance line here seems most appropriate, moving the stop losses to secure the position. And let's see how the market is going to play out from here. And for those of us who are yet to capitalize on this opportunity, let's exercise patience and see if the market will retrace into structure to continue the uptrend move, or evolve into an uptrend continuation pattern where the breakout of structure will welcome more buying opportunities. So let's see how the market will play out. Patience is required at this juncture in time. And if there are any new development that I did not mention in this analysis, trust me, I will be giving you that update on both my TradingView and Telegram platform. So I guess I've made justice to the XAUUSD chart. Let's see how the market is going to play out around here, and I wish you the best of luck on the XAUUSD. Do you have any questions? Are there any questions whatsoever, or you need some further clarifications? Feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions before we go ahead to round off on today's Forex Morning Mastery. All right, I can see your comments here, Torres Master. All right, you're still around. You said I've been trying to join the Go Challenge, but I have not managed to join. Kindly support. Okay, it's not that complicated at all. For you to join the Go Challenge, you have to click on the link to which refers to the platform, and you can find the link right in the description box of this current video. Click on the link, and once you click on the link, you have two options there. We have the Patron Pledge, and of course we have the Go Challenge. So if you're going for the Go Challenge, click on the Go Challenge, and you have privilege to the features of the Patron Pledge as well. So click on the link right in the description box below. It takes you to a page. Click on the Go Challenge, and then you follow the prompt appropriately, and you will be taken into the platform. It is quite easy, so just follow the link right in the description box below. I hope I answered your question there, Torres Master. So it has been a wonderful day here. It has been a wonderful first day. We were able to identify very simple and of course insightful trading setup. In fact, I'm very inspired this morning, as this week is looking very promising, and I do have a strong feeling that we are going to be making some significant profit this week. So ensure you've marked out the levels and structures we've identified on the chart, as they're going to be playing a major role in helping us capitalize on this potential opportunity that the market is going to be presenting this week. Remember, we have quite a ton of high impactful event from both the United States and the United Kingdom, which has a tendency of influencing the sentiment in the market in a particular direction very strongly. So let's ensure that we are on standby to capitalize on these opportunities. So today we were able to take on the three financial instruments on our watch list, including the USOILSPOT, the GBPUSD, and of course the XAUUSD, my favorite asset. And we were able to identify simple setups to help us navigate the current market dynamics. I do hope you are able to mark out these levels. They are very important in helping us manage our respective trading strategies on this particular asset. And if you have done that, well done to you. So all we need to do right now is exercise patience, and let's see how the market is going to play out around those structures. So exercise patience, allow the structures to mature, and of course you will be on the good side of the market. And always remember, I usually say this, of course, always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place. And for those who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here. If you had done so, I'm looking forward to seeing more of you same time on Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare for the second half of the week, which promises to bring in some high level of volatility due to the economic event we are looking forward to. So looking forward to seeing you on Wednesday's trading session. So it's on this note, I would like to wish us all the best of luck today. And Go Challenge members, I'm going to be with you in a moment, and I wish you the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.